Good morning. We will pay attention to the repurchase of shares today and when the shares are bought back at a higher price than the average price. According to the different textbooks, there are 3 different methods to record the repurchase of shares, but the following method is recommended by the Education Department, and it's also the easiest method to record these entries. The following information was obtained from Cullinan Limited. The financial year of the business is the 28th of February 2015. So the financial year of this business is from 1 March 2014 to 28 February 2015. Any transactions before 1 March 2004 is before the current financial year and will form part of the balance. Any transactions between 1 March and 28 February 2015 will be entries for the current financial year. On the 1st of March 2011, 400,000 ordinary shares were sold at R1.80. So if I say 400,000 times R1.80, it gives me 720,000 that was received as capital. Then on 1 June 2012, another 400,000 shares were sold at R2 each. So 400,000 times 2, the capital provided was 800,000. If we look at the next date, 28 February 2013, it's before the current year, so it is also part of the opening balance. So we sold 200,000 at R2.50 each, that gave me 500,000 Rand. If I want to work out what is the total number of shares that was already issued, it's the 400 plus an additional 400 plus 200, so issued shares is 1 million shares. The total amount of money that was collected when these shares were sold was 2.020 million. So if I divide the money with a million, it gives me the average price per share as R2.02. Okay, then they say that they decided that they're going to buy back shares at R2.29. And they want to buy back 300,000 shares times R2.29 will give me 687,000. So that is the amount that will be paid out to the shareholders. That is more than what we originally charged for the shares. So we want to see what is the amount that will be reduced in the capital. And in the capital account, you cannot reduce it with more than R2.02, because when you sold the shares, you credited the capital account with the money received, and that gave us an average on the credit side of R2.02. So the average price, R2.02, will be multiplied with the 300,000 shares, and that will give us 606,000. So the capital is reduced with 606,000. The difference between the amount that will be paid, 687,000, and the amount that we can reduce capital with, 606, gives us the 81,000. So this 81,000 will be taken from the retained earnings, so that we can show that some of the profit that was retained in previous years will be used to pay out to the shareholders. The ordinary share capital account was credited every time when we received money. So if we pay back money, we will debit the capital account. If the buyback of shares are higher than the average price of the shares, the additional amount must be allocated to retained income. Because the additional amount is the retained income that the shareholders are entitled to, because in previous years some of the profit was kept back in the business and was recorded as retained income, but actually that retained income belongs to the shareholders. So they're entitled to get their share of the retained income. If we want to record this journal entry, we will show that the ordinary share capital account will be debited with the R2.02 times 300,000 that we buy back, and that means that capital will be decreased with 606,000. Retained income, the amount that's paid back above the R2.02, so the difference between R2.29 and R2.02 will be covered out of retained income, and retained income will be debited, and we will show that the retained income decreases on the debit side with 81. And the total amount will be paid out of the bank, so that the shareholders will receive in total 687,000 Rand. Included in that 687 is the 606,000 that the share capital is reduced with, and the 81,000 that retained income is reduced with. If we look at the notes, we will see that the authorized share capital, the total amount that you are allowed to sell was 2 million ordinary shares. How many were already issued at the beginning of the year? 1 million shares. That was the 400,000, 400,000, and 200,000. And then we decide to repurchase some of the shares. So 300,000 ordinary shares will be repurchased at the average price that will go into ordinary share capital, 606. So this must be the closing balance in your ledger account for ordinary share capital. If we look at retained income, they gave us the opening balance as 259,000. Because we are paying more money than the R2.02, the excess over the average issued price will be taken out of retained income. So the 300,000 will be multiplied with the amount above the average price, and that means that we will take out of retained income 81,000. So some of the profits that was kept back in the retained income account in previous years are now paid out to the shareholders. What did we learn? When the company repurchases shares, the following steps should be followed. Determine first of all what is the total amount that will be paid to shareholders. Secondly, you must determine what is the average price so that you can see if the average price equals the amount that's paid to shareholders. If the average price is lower than the amount paid to shareholders, you will have to determine the amount that will be taken out of retained income. So whenever you get a question out about repurchase of shares, always determine first of all how much money will be paid to the shareholders. Then you calculate the average price so that you can see whether you are paying back the average price or whether you're paying a higher price than the average price. If the repurchase price is higher than the average price, then the rest of the amount will be taken out of retained income.